Hello everyone, welcome back to Mom Wester channel. And as promised, I share with you at least 3 to 4 trades that I place on a weekly basis. And this time round, I decided to choose the trades more on the options. I would like to share with you some options position that I placed, that I've traded for the past 1 week. I have choose a few positions. I don't usually trade very frequently. I would only do it when I see there is a opportunity. So not very often that it's not something that I must do every day, that I must trade a certain position. It's not like that. So that's why every week I'll just share a few positions that I have placed. All right, so without further ado, so let us start. So today is 26th of November. Happy Thanksgiving Day. And today, US market is not open. So I can have a good rest tonight. No need to look at the market. But usually I look at the market, it's like maybe for the first, I would usually try to look at the market after 1 hour of the opening. I will let everything soften down first, because at the opening, everything is like move very fast, right? I will wait for 1 hour, everything soften down. Then I will look at the market after 1 hour of opening. Then I will sit there and look at the market for about 1 to 2 hours each day. So tonight I can just sleep soundly because it's Thanksgiving Day. All right, today, 26th of November, happy Thanksgiving. And before I start, disclaimer, it's not a recommendation for you to buy or sell any positions. Basically, this is mainly meant for education and entertainment purposes. So the first trade that I would like to share with you is Lululemon. The counter is Lulu, Lulu. So what I did was, on the 20th of November, I actually place a trade. I sell 250 put. Date of expiry of the contract is 21st January next year. So I actually collected $2.02 premium per unit. So the reason I sell put on this counter is because there is a high implied volatility. So I did a very far out of the money sell put, and I will close the position when it reaches 70% profit. In fact, it has reached like about 30% profit already. But if, let's say, what happens if the trade go against me? It's either I close the position, or it's either I let it get assigned, right? Because it's a naked put, so I can always choose to get assignment, and then after that, sell it at a higher price when the price move up above 250, right? So Lulu is actually, okay, here is the daily chart for Lululemon. So here is a safe zone. As long as the price don't drop below 250, then I am safe. I don't need to scoop up the shares. Otherwise, it's either I get assigned or it's either I cut loss. But however, Lulu is actually a pretty good stock, pretty good stay-at-home stock. All right. So as you can see, after the COVID, the stock keep on rising and rising. So over here is more like a resting area. So I believe it won't go below unless there is a bear or market adjustment. The whole market adjusts. Otherwise, if the whole market doesn't adjust downwards, then I think this is more like a resting area. So I'm pretty confident about the stock that it won't go below 250. All right, the next one is NIO. NIO is my favorite counter to trade. Last week, I also placed a trade on NIO on sell put. This week also the same, because last week sell put already closed. right? I already closed the contract, I already closed the position. Later I will show you. But for now, I share with you what I have done. I actually made an entry on 24th of November. I sold 37 put. Last week I sold 24 or 25 put. This time I sold 37 put. And date of expiry is 18 December with $1 premium per unit collected. So enter very simply, it's because of high implied volatility. NIO has always a counter, a stock counter where always have a high implied volatility. That's why I like to trade NIO. So if the price drop below 37, I will let it expire and I will get a sign. I don't mind to get a sign. I have long-term positions in NIO. I'm holding NIO since NIO is at $13. So I don't mind to get a sign. I just staggered my position along the way, right? So last week the 24 put, the sell 24 put doesn't get a sign because I already closed the position at a profit, right? So NIO daily chart. So basically I entered here when the price was 53. And this time around, why I don't choose 25 put is because the premium is very little. So it's like no feeling. Last week, 25 put, you can get $1 premium. This week, you cannot get $1 premium for 24 put. You can only get $1 premium at a 37 put. So that's where I choose 37 put, right? But I'm comfortable. I'm okay with 37 put, right? I don't mind to hold NIO for a long-term basis. So for NIO, when I entered, the price was 53. So safe zone is as long as it don't fall below 37. If it fall below 37, I'll just let it expire and get a sign. JD.com is also my favorite long-term position, JD. So besides I have buy calls on JD. I also have shares in JD. So JD is actually at an all-time high right now. Bounce back down a little bit from 90. $90 is the highest price right now for JD. So on the 24th of November, I sold 75 put. Date of expiry 15 January next year at $1.06 per unit. Share price upon entering this sell put, the share price was actually $88. And if the price drop below 75, I'll be very happy because I'm collecting premium from my sell put and also I'm buying it at $75. I don't mind to buy at $75 because I actually have buy call positions on JD at $80. And I also have at 80 call, I also have physical shareholding in JD somewhere around 60 or $63, I forgot. But I don't mind to stagger my position along the way. I don't mind to buy another round at $75 for JD. So this is where I entered my sell put, and if get assigned, I will get assigned at $75. Otherwise, the contract can just let it expire, or I can just close the contract and re-enter into another contract at another 75 put, right? Depends on how it goes. So if it continue to go downwards, then I'll just scoop up the share at 75. If it doesn't move anywhere, it doesn't go up, doesn't go down, go sideways, then I'll just close the position when I reach 70% profit. So the next one I would like to share with you is PLTR, PLTR. So for this stock is a new IPO stocks, right? So so I actually entered into this position on the 25th of November. The implied volatility was extremely high for this particular stock because ever since its IPO, the share price keeps skyrocketing. So I actually did a sell put on 16 put. Date of expiry is 15 Jan next year and collected $1 per unit. So the share price when I entered was actually $29. So So unlucky that it dropped by half, which means the share price dropped below $16, then I'll get assigned. But I don't mind to get assigned at $16, right? It's okay to get assigned at $16. I don't mind to have a small investment sum to put aside for this particular stock PLTR. So basically what happens was, this is the IPO day, and then it keeps going up within the next, you see, since October, it keep rising and rising, skyrocket high. So I don't mind to scoop up the shares at $16, all right, if get exercise. Otherwise, this is a very nice counter to sell put because of the high implied volatility. And last week, I actually shared with you my position on Tesla and NIO. So today, I just refresh a bit. I actually exited this position. I actually showed that my position, I actually made an entry on 18 November. Last week is the last week's trade. I actually sold it. I actually closed my trade on the 24th November, which is this week. So I sold 285 put. So basically, what I like to do on Tesla and NIO is I always like to do sell put on them. So like for example, Tesla, right? I did a date of expiry 18 December. I sold 285 put. I don't usually wait for it to expire worthless. I usually just take profit, free my capital, and then I re-enter again. So actually, I didn't share it over here, but actually last night, 25th of November, I already entered another Tesla position. So on the 24th, I closed the position. Date of expiry 18 December. Then on the second day, 25th of November, I opened another position on Tesla again. This time round, I sell 300 put because I want to collect a good premium. If the premium is no good, then no point I lock up my capital there, and if it doesn't give me 10% return, then I wouldn't want to enter into the position. So basically, this is what I like to do. I like to sell put on Tesla because of the high implied volatility. So I just closed the position on the next week. You see, the week before I opened the contract, the week after I closed the contract, even though it's a Monday expiry, and I took up 64% profit, I released my capital and I reinvest again on Tesla again. I let the money work for me. That's how I sell put on Tesla. For NIO as well, last week, like what I shared last week, on the 14th of November, I actually sold 24 put, and I actually closed the contract at 72 cents profit. I collected $1 premium. I returned back 30 cents premium by closing off the contract. So I actually make 70% profit already. So then on the next day, 24th of November, I did another sell put at 37, also $1 premium. And then when it reaches a certain percentage of profit, I'll just close. Doesn't mean I must wait for it to get exercise, to get assigned, or get whatever. I'll just close when I feel that the profit is running almost there already, almost 60-70% hit already, and then I see other opportunities, other sell put opportunities, and I'll just close the position, and then I will enter on other stocks if there is other opportunities. Otherwise, I'll continue to sell put, and even though I choose a very long expiry date, but the next week I already gained 70% profit. No point I wait until 15 Jan and close it, right? I'll just close it off and then I re-enter into a new one, right? So this is how I actually trade using my options. How I use options to trade sell put. However, whenever I do a naked sell put, I want to make sure I'm okay with the position go against me. That means I'm okay that I want to scoop up this share if the position go against me, and I must be very alert that if let's say I don't feel comfortable picking up the shares, I don't feel comfortable if I get a sign, then what I will do is I will quickly close the position when I reach 50% loss. All right, so this is how I place my position. So for Tesla, actually I entered here and then I exited here. All right. For NIO, I entered here, I exited at $50 when the share price was $50. All right. So finally and lastly, invest safely, and capital protection is very, very important. So I will continue to share my weekly options position through this channel on a weekly basis, because I don't place options trade each and every day and then close each and every day. I'm more like a weekly player. I open a position that is meant for monthly, or expire next month, or expire in the next 2 months. But I would usually close it if it is wise to close even before next month expiry. So this is how I trade options. And I also do share my daily market analysis each and every day. I would spend about 20 to 30 minutes to share my daily market analysis. If you like to follow my daily market analysis, please click the subscribe button so that you can get the notification almost every day whenever I start to share my daily market analysis. Otherwise, if you like my weekly sharing, my weekly options position sharing, please click the like button, and thank you so much for your support, and I'll see you soon. Thank you. Bye bye.